Hello everyone, this is Prodigy Trades, and I would like to walk you through a few setups I took from this week. I'll be going over how I framed the narrative, what I was looking at, and how the trades delivered. My focus, as always, will be on structure, time, and liquidity. So here I'm going to show you the trade I took on Tuesday during the London session. So on the right here, I have the 5-minute chart. And what I like to do first is always create a narrative of where I think price will go. So the way I do that is I look for relative equal highs and lows. So here we can see we have very smooth equal highs here. Remember buy side liquidity. Similarly, here we have our, let's take that, our equal lows. Okay. Now, I wanted to enter longs. That was my bias here. I wanted to see price take out the sell side here, which it did at 410 during the 3:50 to 4:10 a.m. macro. And then I wanted to see a reversal and take out the opposing buy side liquidity here. And that was my plan here. So I'll show you my execution marks in a second. I just want to frame my entry and what I was looking at to develop this bias. So if we look at the 15-minute chart here, we have a bullish order block that formed at 3 p.m. during the PM session on Monday. So that was what I was looking at here. So we have this consecutive down close candles here that form the bullish order block. And there. Okay. I had my stop loss placement. Actually, I'll go into that in a second. But this is what I've framed my narrative over. I wanted to see price reverse, take out the sell side here, and then tap the bullish order block. Maybe get to the upper quadrant to show bullish sentiment, and reverse towards and take out the buy side liquidity here. As you can see here on the 5-minute and the 15-minute, we tap the upper quadrant or the high of the order block, and we never return to that level, and we just go out and take out the highs here. So to show you my execution, this is the 5-minute chart. I entered off the 1-minute. Let me go here. Okay. So this is where we take out the sell side here at the 410 candle, right at the end of the 350 410 macro. And then we go on and tap the high of the order block a couple times here. And then we consolidate within this. We had this buy side imbalance, sell side inefficiency on the 15-minute. As you can see here. And you can see how the candles close within the fair value gap, and we never close below the low of it. Here, when we're taking out the sell side, yes, on the 1-minute, but we can allow some slack here because it's a smaller time frame. But if you look at the 15-minute narrative here, all candles are closing above the lows. Okay, we consolidate here, and as you can see, the candles are closing above, right below the highs, just laying on the high of the fair value gap. And then we move down, and here we don't even wick. The wick doesn't even touch the low. To me, that shows bullish sentiment here, and we're just waiting for the factor of time, because here we're between two macros. As you can see, when we get to the 450 to 510 macro, right at 450 here, we start moving outside of the fair value gap. The 449 candle closes above, as you can see, taking out this minor buy side here and going on towards the liquidity. All right, to show you my entry, obviously I use these higher time frame PD arrays to base my foundation of the trade on. But for my entry here, I had this inversion fair value gap. Okay. Oops, I keep messing with that. Show you my execution. As you can see, I had a limit order placed at just above the high of this fair value gap. Entry was 945. Just a tick above the high. Now initially I had my stop loss placement a tick below the mean point threshold here. I can outline that here. So this is where my initial stop loss was. Okay. And then once we closed above the mean point threshold of this 15-minute, the consequent encroachment of this 15-minute buy-side imbalance, sell-side inefficiency, I moved my stop loss right below the consequent encroachment of the 1-minute fair value gap that I entered off of, because I didn't want to see price return, especially go below the high of the 15-minute order block here. All right. And then once price exited and closed above the fair value gap, that's when I moved my stop to above break even, just above break even. And then that's when I actually went to sleep, because it was a risk-free trade. It was quite late for me on the East Coast of the United States. And I had a very high conviction in this trade. And as you can see, at 6:24, we go on to take out the buy side, and that's where my exit was. The next trade I'd like to review is from Thursday during the New York Open session at 9:30. Okay, so here on the right, I have the 1-minute chart here. And the way I like to start out is by always first annotating the relative equal highs and lows. So we had this clean buy side liquidity right here. Oops. Okay. All right. And I tuned into the market around 9:15. So this was the first thing that I marked. We hadn't even opened here. And as soon as we opened, we formed the opening range gap low, because we gapped down from the previous day settlement price. So I like to have that level marked as well. And as soon as we opened, we ran down here. As we can see, the price rallied down. On the daily chart, as you can see, it's really important to refer to these key levels on the daily chart. We formed this buy-side imbalance, sell-side inefficiency, along with this volume imbalance. We got to take that into account here. This is it's going to play a massive role on how price reacts to it. As you can see, price runs down, and we bottom out here. My entry, I can turn on my executions here. As you can see, we reversed at the high here, and ICT always says it's not good to try to pick the bottom. So this new day opening gap here, we form a fair value gap on the leg moving down, and this was my entry here. I wanted to use this as an inversion. I was on my phone actually, and I didn't have time to set it up, so I just used the market order to get a fill. And I was very confident in this trade. I had my stop loss placed a tick below the new day opening gap here, because these levels are, price really respects them. But as you can see, we wick into this inverse fair value gap, and we close well above the high of the fair value gap here. And then we just have a clean run towards the buy side liquidity. I also had a second smaller scalp that I took after 10 a.m. on Thursday. I was trying to go for shorts here. I was using this fair value gap right here. As we were wicking into it, I did another market order. I was targeting this new day opening gap here. Very tight stop loss. I had my stop placed right above the consequent encroachment here. And I was targeting the new day opening gap, but this fair value gap that formed on top of it, it's a very strong fair value gap. As you can see, the candle was closing above it. So as we were wicking into this consequent encroachment, I did a market close here. And that was trade number 2 for Thursday. On Friday, I had my first trade that I took during the 1050 to 1110 macro. All right. I apologize for having so many levels. I know it can be distracting for a lot of people, but for me, it really helps to see why price is behaving the way it is. And it really, opens things up for me. So I like having the new day opening gaps and opening range gaps and new week opening gaps, just having them on my chart, at least for 5 days to 5 weeks for new week opening gaps. Okay, so the narrative that I was using for this trade, as you can see, we had this new day opening gap and opening range gap very close. So this was a very strong level in price. We had, on the 5-minute chart, we had this bullish fair value gap right here. That overlaps both of these levels. Okay. Now I had my entry here on the 1 minute at 10:54, right after 4 minutes after the start of the 1050 macro. And on the 1 minute, I used the fair value gap right above here. Okay, and that is within the upper half of the 5-minute fair value gap and right above the opening range gap low from Wednesday. Okay, I had my entry placed a tick above the opening range gap low, just because it's likely that price would return, to this 5-minute fair value gap. As you can see, it closes right below the low here, and even on the 1 minute right here. Okay, on this 1 minute fair value gap, we can see price closes within it. So I had my entry placed, my limit order right above the high, or right above the opening range gap low, 1 tick above. And I've been putting that into practice as well. So this is the discount wick of Thursday that I graded right here. We had a very small body. And I'll go into the 5-minute chart and show you. Okay. So we go in and we go below the upper quadrant of the wick, the 25% level. We're well above the consequent encroachment here, closing above the consequent encroachment of the 25% level and the low, as you can see. So to me, that was bullish sentiment here, that we're going to go up and perhaps use the high of the fair value gap and target liquidity here. We had this bullish fair value gap that formed, and there's a small little volume imbalance, so I have to take that into account. That formed on the 5-minute chart that overlapped the high here of the daily fair value gap. So that was another added confluence. But as you can see, I had a limit order placed here, right above the daily wick. Sorry, the daily fair value gap high. And I was targeting the new day opening gap here. And I had my first exit here. And I wanted to let price perhaps explore higher, take out these highs here. But we failed to do so, at least not till later, as you can see. And I trailed my stop to the just below the new day opening gap here, the low. And I had my the 50% level of the daily wick that I showed you. And I had my exit just below that. As you can see later on, in the afternoon session after 3 p.m., we go on and take out all the liquidity that's resting above. Take out all these highs and fall just short of the opening range gap low from Thursday. So those are all the trades I took this week. I hope you were able to, take something away from this, and I appreciate you guys taking the time to watch. Thank you very much.